access. There's the sirens now. Guys, are we okay?
Iran's aggressive escalation with Israel last evening triggered a massive drop in Bitcoin's value, causing it to plummet nearly 10% and sharply fall below the $62,000 mark. This sharp decline sent shockwaves through the financial markets. But is that the full story, or is there more behind Bitcoin's dramatic plunge? Before the chaos of Saturday evening, Bitcoin's market behavior was somewhat predictable, influenced heavily by anticipation of the 2024 halving event. 20 to 25% price fluctuations in the coin are common as investors switch between buying and holding, which is shown by the fear and greed index shifting towards conservatism. So, what has caused Bitcoin's steep decline over the past 24 hours? Let's break it down. 1. Economic data. Hotter than expected US inflation data on Wednesday dashed hopes for rate cuts, plunging markets. Compounding the turmoil, a credit rating downgrade in China intensified woes across Asia. By Friday, hints from the Federal Reserve of no interest rate cuts further rattled the already unsettled financial markets. This turbulence caused both Bitcoin and gold to drop by 4%. 2. Declining ETF inflows. The Bitcoin ETFs saw a significant reduction in inflows, dropping to a monthly low of $133 million on March 14th. The reason may simply be a waning of the initial investor euphoria. 3. Geopolitical tensions. By Friday evening, as the White House signaled a potential Iranian attack, instability seized the traditional markets. The Dow Jones Industrial Average tumbled by 475 points, setting the stage for a market in distress. Yesterday's Iranian missile attack on Israel triggered a sharp 7% drop in Bitcoin's price as the market panicked over the potential broader economic consequences, increasing investor risk aversion. 4. Leveraged trader losses. The sharp decline in Bitcoin's price led to the liquidation of over 290,000 leveraged traders in the last 24 hours, with losses totaling nearly $1 billion across all crypto positions, including $347 million from Bitcoin alone. These traders had borrowed money to bet on Bitcoin's price rising. Unfortunately, 80% of these were long positions, meaning they expected the price to increase. The sudden drop in price took them by surprise, triggering automatic sell-offs as their positions were forcibly closed. This wave of liquidations not only intensified the drop in Bitcoin's price, but also increased selling pressure and volatility in the broader crypto market. In conclusion, the key factors that contributed to the sudden decrease in Bitcoin price and the extensive liquidation losses included heightened geopolitical tensions, adverse economic data, reduced ETF inflows, and the extensive unwinding of leveraged positions. It looks like the markets have already adapted to the ongoing tensions in the Middle East, and any future changes in global markets may probably depend more on oil prices than on the conflicts themselves. Like other assets, Bitcoin's price has been quite volatile, but many experts think it will start to climb again soon, despite some temporary challenges. What do you think?